Hello, investors. Welcome to today's U.S. Stock Market Analysis Newsletter. Thursday, September 4th, 2025. The market opened September with many positive signals, especially from the technology group, when large stocks simultaneously broke out strongly, leading to the recovery of the Nasdaq and S&P 500 indexes. Specifically, the S&P 500 index is currently trading around 643.74 points, up slightly from the previous session. Meanwhile, the Nasdaq 100 index tracked via the QQQQ ETF increased to 570.07 points, equivalent to an increase of nearly 0.8%, led by the breakout of leading technology stocks. The biggest highlight of today's session was Alphabet, Google's parent company, soaring 9.1% after a favorable ruling in a major antitrust case. This development has boosted confidence in the resilience and growth of technology giants. In the same trend, Apple also increased sharply by 3.8%. Tesla increased by 1.4%, contributing greatly to the Nasdaq's growth. On the other hand, U.S. government bond yields fell slightly, reflecting expectations that the U.S. Federal Reserve Fed could soon adjust monetary policy in a more dovish direction, especially when recently released employment data showed that the U.S. economy is growing more slowly, helping to reduce inflationary pressure. On the earnings front, the market continues to be supported by very positive second-quarter earnings reports. So far, the average profit of S&P 500 companies has increased by 13.2% compared to the same period last year. An impressive figure, although down slightly from the 21% growth in the previous quarter. A notable point comes from the latest report of Goldman Sachs, when this bank commented that the global market is entering a postmodern era, where the traditional investment strategy of buying and holding large indexes may no longer be as effective as before. Instead, investors need to diversify their portfolios, be more flexible in their strategies, and consider cross-border investments to adapt to the volatile macro environment. In summary, the U.S. stock market on September 4th is witnessing strong breakout from technology group, especially Alphabet and Apple. Expectations that the Fed will pivot policy due to weaker economic data. Corporate earnings continue to be positive, supporting stock valuations. And a clear warning from institutional investors. This is no time to invest in the beaten path. If you are looking for investment opportunities during this period, pay special attention to technology groups. But also remember to manage your risks and stay updated with signals from the Fed and macro data. Don't forget to subscribe to the channel, and leave a comment if you have questions or other perspectives. See you in the next news.